All right. Well, let's move on. Let's invite our next management on the show. We have Rainbow Children's Medicare. That's the next stock on our radar to discuss the expansion plans, business outlook. We're joined by Dr. Ramesh, the chairman and managing director at Rainbow Children's Medicare. Hi, Dr. Ramesh. Good morning, and thanks a lot for joining in. Well, I've had the privilege of visiting your hospitals in South India, and boy, oh boy, you're taking care of the little ones, and best in terms of medical assistance is what I understand in parts of India as well. Well, tell us, Dr. Ramesh, how are things shaping up? You have big capacity addition plans. I think you're close to around 2,000 beds. Tell us about how do you see these capacity additions take place? And also a word on your expansion in North India, namely Delhi, Gurugram. I believe that out there you're looking at increasing your beds by a couple of hundred beds. Tell us more of that.
Yeah. Thank you, Nigel. Happy New Year to you. So our the bed expansion almost we're going by 50% in the next 3 years' time. By calendar year 27, and I think we'll be adding about 1,000 beds. Most of the beds, about 450 beds, are going to be in Gurugram, and the rest of the beds are going to be in the south, mostly in the form of regional spokes as well as the city hub and spoke model. So this is how we are looking at it. In terms of Gurugram, we are kind of almost close to obtaining permissions. We are kind of planning to do a groundbreaking towards end of February or first week of March. So from there, I think it will take about 2.5 years' time. Maybe by 27 mid-year, we'll be operating both the hospitals in Gurugram.
Okay, all right. So 400 beds is what the addition is likely to be in Gurugram itself, out of the total 1,000 that you're looking at by 2027. Is that correct?
Yeah. We have a possibility of 200 beds coming in the form of acquisition, which is we're in the initial phase of working on it. Probably kind of we will know in a few months' time.
Tell us, where is that inorganic growth, Dr. Ramesh? I remember pushing you even when you had joined us on Inside Out. I was trying to quiz you, where exactly are you looking at? So this 200 bed opportunity, first of all, the time horizon that you're looking at, and if you could give us a broad geographic idea. Is it in that part of the world, the northern India?
Yeah, as I was always kind of been passionate about the Northeast, so that's likely to happen soon. And also kind of the acquisition closer to Hyderabad as well.
So these are two separate acquisitions. Hi, sir. Great to have you on the show, Surabhi here. So you are looking at two separate target entities, one in the Northeast, one in Hyderabad. Could you give us a rough sense of how large these entities are, bed capacity, and what are you thinking right now in terms of funding these? How close you are, and whether the funding is going to be all entirely through internal cash?
I think the Northeast one is, right now they have 100 beds. I think we are kind of working on expanding to 150 beds in the Northeast. In the South, which is one of the tier 2 cities closer to Hyderabad, we are working on about acquisition of 75 beds. So
and by when?
I think these things too should happen in the next 4 months' time, 4 to 5 months' time. This is what we are working on. So, CapEx wise, so we have a lot of internal accruals. That shouldn't be a problem. We would be kind of taking over majority of the stake in both the places. We still yet to decide how much majority we're going to take.
So your cash was about 580 crore as of September. Will that be enough for you to fund your acquisitions, the two proposed ones, and your capex plans?
Yeah, that will be more than enough for the moment.
More than enough. Okay. And as you expand your bed capacity by FY27, what would the margins of the company look like, according to you? Because you've been steadily expanding your margins. So what's the trajectory on margins as you see it?
So we've been expanding in the last 3 years' time, kind of year on year. We are adding about 15 to 18% of the beds. We continue to deliver about 25-26% of EBITDA margins. We never failed on that. So how I look at it is that now what we call is disciplined expansion. So if I'm adding about 250 beds in a year, then that will probably take about EBITDA pressure of a percentage or so for about 2-3 quarters. Otherwise, we'll come back to normal. So we've been witnessing this for the last 3 years, and I think we'll continue to grow the same way. the thumb pressure will be there for a few quarters. Otherwise, we will come back and quickly. One of the reasons our southern business is getting more matured and matured. So as the southern business gets more matured, that EBITDAs are not going to be a big problem for us.
Okay, all right. Just a quick couple of questions then with regard to this EBITDA per bed. I think as of last year, it was 6.4 million. Now, I'm reading a couple of brokerage reports that believe that in the next 2 years, it'll go to around 8 million. Do you think that that could be the aspiration?
Yeah, I was looking at it. I think it would probably are closer to the 8 million and may not be exactly 8 million. Suppose if you are growing our RPOPs by 6% year on year, I'm sure we could achieve that, provided occupancy support us with the 55% of occupancy at a group level. We should be able to achieve that, closer to at least 8 million.
Got it. I just want a quick word on the Madhukar Hospital in Delhi. I think profitability is a little bit lower out there. You could help us out with that number. But the belief is that the margins move to mid-teens over there. Could you help us out with clarity on that front?
Yeah, I think it's Madhukar is a kind of would be probably talking about 10% or more than 10% margins. So this is a model where I don't think we will achieve the EBITDA margins of 20 or 25% because of the cost structures, because of the free beds, what we are supposed to do, and also the high rental payouts to the owners. So these are all the kind of stumbling blocks there. Perhaps this is how DDA properties, trust hospitals work. So we are doing well, but the margins are going to be the same. But considering that our capex per bed was quite low, we believe it's okay.
So from 10%, it moves up a little bit, say to 12 to 15% in the coming 18 months?
I think it should go up to 15%. Beyond that, it's going to be challenging.
All right, Dr. Ramesh, you built a great franchise, taken care of a lot of children as well across India. What's the, the succession plan? I believe that your son as well is already on the board, but he's due to join the business. Could you help us out with that succession plan? Because succession is something that the stock market looks at very, very closely.
Yeah, my son is Ramesh Kancharla. He's right now doing a fellowship in London within the transplant fellowship program in King's College Hospital. So he has got a kind of seat in London Business School and is waitlisted in Harvard. So very likely he's going to join one of these two schools in August, September of current year. So we always believe in that. We have been a kind of purely doctors and doctor entrepreneurs. The next generation is likely kind of, if they come back with a business background to build the organization, will do better. So I encouraged him to kind of go for an MBA. So he's a bright guy. I'm sure with a medical background and business background, I think that's going to be a future asset for a long-term building of Rainbow.
Okay.
Thank you. Thank you, sir, for joining in. We look forward to chatting with you when your Q3 numbers come out and as and when those acquisitions close. Thank you once again for joining in. Get into